If you can understand supply and demand flip zone, then you will make so much money than those who are still trading support and resistance. Now, this is what you will learn in this video. And before you talk about supply and demand flip zone, first of all, you want to know what is supply and demand. Now, supply and demand are basically the points where smart money tend to enter for a huge buying or selling pressure. And then what is supply and demand flip zone? Supply and demand flip zones are transitions where supply turns into demand or where demands turn into supply. Now, these are what you will learn in this video. Firstly, what is supply and demand? Secondly, what is supply and demand flip zone? And thirdly, how to spot and understand flip zones. And lastly, how to combine liquidity and flip zones. Now, without further ado, let's dive deep into it. Let me show you what I mean by this. Now, in a trend, in a downtrend where we have something like this, our lower low, lower high, lower low, lower high, and so on and so forth, and you want to spot your flip zone and you want to spot your demand zone. Now, this is supply. Supply is in control of this market. As the market is trending down, supply is in control of the market. All right, so this is the point where supply flips into demand. All right, so as we have here our supply zone, supply and supply here, and at this point price broke past this last supply, which is right here, this last supply zone, which is right here. And did you see what the market did here? This is just an example. Okay, this is not the chart. I just want to use this to identify something. Okay, I will go down to the chart and show you what I mean by this. Now, if this supply zone right here were to do its thing, price will just continue going down, just like this. Price will just continue going down, breaking past this last lower high right here, and just continue going down like this. But it failed. All right, it failed. Price did not do that. Okay, price did not do that. Now, price gave us, what did you see here? As price broke past this last supply zone, price gave us a higher high. Instead of creating a lower high, breaking past this last low right here, price did not break past this last low. Price gave us a higher high. All right, making this a higher low, because this low here is higher than this previous low. I don't know if you're understanding something. And this low here that is higher than this previous low, which is our higher low, is our flip zone. All right, it's our flip zone. I'm teaching you something so that you understand how to spot your flip zone. This is our flip zone. This higher high, this higher low, sorry, that is higher than this lower low right here, is our flip zone. So you are spotting that out. And when you spot it out, you wait for your flip zone to sweep liquidity. All right, when you are in the chart, let's assume this is the chart. You wait for your flip zone, which is right here, for price to come back to it, sweeping liquidity below this flip zone, before you see like a confirmation that will tell you to enter for the buy or sell entry. Okay, depending the trend that you are trading. All right, so this is when supply flips into demand. I don't know if you can understand something now. This is example of demand flipping into supply. All right, when we are having something like this, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and instead of price to break past this last higher high, giving us another higher high, then price will refuse. Okay, will refuse. This point that price refuses is our flip zone. Okay, that is the failed reaction. All right, you have to see this failed reaction, because if this demand zone were to do its thing, if this demand zone right here were to do its thing, price will just break past this last higher high and continue going up, but it did not. So price failed at this point, this failed reaction here, and price broke past our last higher low, which is right here. Price broke past our last higher low, coming back to sweep liquidity be above that flip zone right there. All right, so you have to wait for a liquidity sweep on your flip zone, on your supply or demand flip zone, or whatever the trend you are trading. Wait for liquidity sweep before you enter for that trade. So after that, then you can take the sell entry from that point, and you just see price go in your direction right here. So as you can see, demand zone, demand zone, demand zone, demand zone. Now at this point, this is our last higher low, which is a demand zone, but it failed. Like I said, it failed. Price is supposed to break past this last higher high and continue going up, but it failed. All right, you mostly see this reaction at a point of interest. You mostly see this reaction at a point of interest. That shows you that price will no longer go up. Okay, so this failed reaction here is very important. Like I said, you spot out your failed reaction where price is supposed to break past this higher high, but it failed and gave us a lower high, because this high right here is lower than this high right here. I don't know if you're understanding something. It's lower than this high right here, and price broke past the last low, making this a lower low. So now price is now in a downtrend and no more longer in an uptrend. All right, so you wait for a liquidity sweep right here. This is perfect. Okay, in the chart it's not going to look like this. It's very, very different from the chart. In the chart you are going to see a lot of noises that might confuse you. All right, but I'm going to show you something so you can understand and not make mistake while trading something like this. All right, so let's dive deep into it. Let's go to the chart. So in a chart where you have something like this is what we are saying here. At this point, an uptrend. Okay, when price is doing something like this, when price is doing our higher high, higher low, higher high, higher low, and higher high. Okay, according to this chart, this point right here is our last higher high. As you can see here, our last higher high. Now this is a demand zone. At this point there's a demand zone right here. At this point there is a demand zone. There is a demand zone right here. Okay, so we are waiting for price to trade back into our demand zone and for this uptrend to continue. Understand? We are waiting for price to trade into this demand zone for this uptrend to continue. And right here, what did you see? Price traded into the demand zone and it failed at this point. Okay, it failed at this point. If this demand zone were to do its thing, price will just continue going up, breaking past that last higher high, breaking past that last higher high at that point, and just keep going up just like that. But price failed. Okay, price failed. So this is the failed reaction right here. Okay, you need to see this failed reaction. It's very, very important, and you are spotting it out. Immediately you see your failed reaction, you are spotting it out. Okay, and after that failed reaction, look at what price did. Price broke past the last higher low right here. Now price is now giving us a lower high instead of a higher high. Okay, because if this demand zone were to do its thing, price will continue going up, giving us a higher high. But price failed and gave us a lower high right here and a lower low. Okay, now this is our flip zone. We are waiting for a liquidity sweep. Like I said, always wait for a liquidity sweep before you take that beautiful trade. Wait for a liquidity sweep. Okay, so right here you have a liquidity sweep, and immediately you see your engulfing candlestick. Just as simple as this. Immediately you see your engulfing candlestick, then you enter for the sell or buy entry. Okay, depending the trend that you are trading. Right here, You take out your sell entry, immediately you see this engulfing candlestick, engulfing the last candlestick. You want to place your take profit right below this point or whatever next demand zone you are placing it. Then your, your stop loss be above that flip zone. Okay, this is a bearish trend. We are trading a bearish trend. So you place it above that liquidity sweep, which is right here. Now price has swept liquidity, has swept this flip zone. Okay, so you enter for your trade and collect cash or whatever. All right, so this is how you play it. Okay, so this is how you play it. Let me show you demand flipping into supply. Now in this uptrend where we have something like this, our higher high, higher low, higher high, higher low, higher high, higher low, and our last higher high right there. Our last higher high right here. Okay, so now there is a demand zone at this point causing this huge bullish move. I don't know if you can see this. There is a demand zone right here causing this huge bullish move. Now we are spotting out our demand zone. Firstly, we are spotting out our demand zone, which is somewhere like right here. We are spotting out our demand zone and wait for price to trade into it. Now this is an uptrend. At this point, it was an uptrend. Okay, so now we are waiting for something for price to trade into a demand zone and continue going up. Like I said in the last example, price is supposed to like come down into this demand zone, trade into it, and just continue going up, giving us another higher high. But price failed at this point. As you can see, price failed to go up to give us another higher high, but it stopped at this point, making this a failed reaction. So this failed reaction is our flip zone. Don't forget this. This failed reaction right here is our flip zone. Okay, so after price failed at that point, price continued going down. Now this is where a lot of retail traders get it wrong. Okay, this is when a lot of retail traders miss it. Okay, because a lot of them will be taking their trade from this point. They'll be taking their sell entry at this point, which is very, very wrong. Okay, so in order for you to become profitable, you have to think clearly, okay, and trade like the 1% and not the 99% traders who fail in trading or who quit in trading. This is what a lot of retail traders will do right here. And you know what? They will get stopped out. Before price even gets to their take profit, they will get stopped out right here. They will get stopped out. So you have to trade like the top 1%. Remember, don't do what the majority is doing. Okay, so you wait for your flip zone, which is right here to sweep liquidity. So you might as well spot out your flip zone right here. Right here, you might as well spot out your flip zone and wait for price to sweep liquidity above that point. And right here, we have a liquidity sweep. I don't know if you can see this. It's just as simple as this. We have a liquidity sweep right here. And immediately you see that liquidity sweep, you wait for an engulfing candlestick, which is here. This red bearish candlestick clearly engulfs this last candlestick with a huge candle wick right here. Okay, so you take out your sell entry and you place the trade and your stop loss above that flip zone, above that flip zone right there, and you take profit at the next demand zone. Okay, at the next demand zone, which is like right here, at the next demand zone right there. So as you can see, cleared out perfectly well. All right, so you have to think clearly and rewind your brain. Okay, don't trade like the 99%, trade like the 1% traders who succeed in trading, who are profitable. Okay, so go out there and try this out. Let me show you another example so you can be able to comprehend what I'm saying. Right, so let me show you another example. Now, this is an example of supply flipping into demand right here. So, as we have as usual, our downtrend price creating a lower low, lower high, lower low, lower high, lower low, lower high, and so on and so forth. All right, and so on and so forth. Sorry about that, and so on and so forth. Continuously, price is creating a lower low and a lower high. Now, this is a supply zone right here. I don't know if you can see this. Let me clear this out so you can understand me better. So, this is a supply zone, which is our last lower high right here. Our last lower high. Or we'll say this is another supply zone. Let me use this for example. This is another supply zone. The first supply zone. Price is supposed to trade into it and continue going down just like this. Price is supposed to come back to that supply zone and continue going down, creating a lower high and lower low. I don't know if you're understanding something. This is what the price is supposed to do at that point. Continue going down, but price failed. Okay, price failed right here. Can you see this? Price is supposed to break past this last lower low right here, giving us another lower low. But price failed. It failed at this point. All right, it failed at this point. So this is our flip zone. Transporting that out. Firstly, a flip zone right there. A flip zone right there. Now we are waiting for price to trade back to our flip zone before you enter for your buy entry, because this is the bearish move and we are waiting for the bearish to turn into the bullish, which is the supply flipping into demand. All right, so right here, a supply zone, price traded into it, failed to break past this last lower low, giving us a flip zone right here. I don't know if you can understand, giving us a flip zone right here. And price finally broke past our last lower high, giving us a higher low. Sorry, a higher high, because this high is higher than this high. So price break past our last lower high, giving us a higher high instead of a lower low right here. Price gave us a higher high. So we are waiting now for price to trade back into our failed reaction, which is our liquidity sweep. Sorry, which is our flip zone right here. For price to trade back to this point after we spot it out. Now, price can do something. Price can do two things. No guru will tell you, or no trading mentor will tell you that price is going to trade below this flip zone. Okay, there is no example like that. Okay, what you have to do is like react to the market, react to what the market is doing. Now, in our first and second example, we have price trading below, sweeping liquidity below this our flip zone right here. And in this example right now, price did not sweep liquidity. Remember, we want to react to the market, and an engulfing candlestick came into it. Now, you seeing this engulfing candlestick, are you still going to wait for price to sweep liquidity? No, you already seen example that price is going to turn bullish. So why will you be waiting for a liquidity sweep when you have already seen an engulfing candlestick? Now, if price is supposed to sweep liquidity, you won't see this engulfing candlestick. Okay, you won't see that. If price is to sweep liquidity, you won't see this huge bullish candle. You won't. What you will see is a bearish candle sweeping liquidity below this point. But it didn't say that. So what we saw is a bullish candlestick, bullish engulfing candlestick. So we are reacting to the market and to what the market is giving us and showing us. All right. So right here we have our engulfing candlestick. Immediately you enter for the buy entry right there and wait for that engulfing candlestick to finish. Okay. Don't place trade immediately you see a green candlestick or whatever color you are using. Don't wait immediately. You don't trade immediately. You see that bullish engulfing candlestick. Wait for the candlestick to finish because chances are this candlestick might still be a fake candlestick. It might just go up and just trade down. So wait for that candlestick to finish forming before you can enter for the buy entry. So after the candlestick finish forming, then you check if it engulfs the last candlestick, which is right here. If it did engulfs the last candlestick, then that is an engulfing candlestick. Then you enter for the buy immediately. And your stop loss below that flip zone right there. And your take profits at the next supply zone, which is right here. So as you can see, it was a beautiful trade. So this is how you trade your supply to demand flip zone or your demand to supply flip zone or whatever trend you are trading. All right, so go out there and try this out. And also don't forget to subscribe to this channel and also hit that like button and comment what you think about this video. All right, and happy trading day and happy trading week.